All right, welcome to today's episode of the Virginia Investor Podcast. As a guest, we have a really strong real estate investor and sponsor, not syndicator, who has grown a portfolio to thousands of units, simplified, and is now back on track to grow his portfolio some more. Lyle Schiavone, welcome to the podcast.
Good morning, Stephen. Happy to be here.
Yeah, glad to have you, man. I really am excited to learn more about your journey. I think when we met a couple years ago, immediately kind of blown away by your energy, your attitude, and some of the story. Like, I don't even know your whole story, and I hope I get to find out a lot about it today, but it sounds like you've done just some incredible stuff with investing, and you're on track to do a lot more stuff. So I'm looking forward to diving in. I want to know where you got started. Like, tell me a little bit about growing up, and I kind of want to learn how that shaped you into getting into real estate.
Yeah, that's a great place to start. And it's funny, we met a few years ago, but a lot had happened before then and a lot has happened since then. Right. So good to still be here chatting with you.
Right.
So I grew up in Williamsburg, Virginia. I joke that I'm just a simple Virginia guy. But growing up in Virginia, my dad had a best friend whose name was Ralph DeRosa. And he was a prolific real estate developer in Virginia. And we grew up as a kid in a neighborhood that I call him Uncle Ralph. Uncle Ralph was building a neighborhood in Virginia. And so as a little kid, I used to drive around with my dad and Uncle Ralph. And I remember one day we got stuck in his truck. Like he was a master plan community developer. So he was building neighborhoods.
Awesome.
For the Virginia folks, you might be familiar with a huge subdivision called Fawn Lake. Ralph was a prolific developer. And Ralph built Governor's Land at Two Rivers in Williamsburg, Virginia, which is where I was born and raised. And my parents still live there, 30 something years later to this day. And I was probably 10, 11, 12 driving around. And so for me, that was a pretty impactful time in my life to think oh, what does Uncle Ralph do? Oh, he builds neighborhoods. And I think that was my first real resonate moment with the built environment in real estate.
What did your parents do for a living?
So it's actually great you ask. My mom used to work actually about a mile from here at what originally was Trigon, which is now Anthem, I think.
Okay.
I can't keep up. It's Trigon and Blue Cross. Yeah. So mom and dad moved from New York, Rye, New York in 1987 to Williamsburg because mom got a job at Anthem in Richmond, and dad was a branch manager for Dean Witter in Newport News.
Okay.
So dad was a financial advisor. Dad still is a financial advisor to this day. Mom's since retired at some point between the Trigon Anthem iteration. So we grew up in Williamsburg, but dad went down to Hampton Roads and mom came to Richmond.
Interesting.
So I spent a lot of time as a kid. We used to come up and go to Mekong,
Right.
And actually we met over Ashland, but my mom used to take me to the train store in Ashland. I was a little kid. So I was very fortunate to kind of travel around Richmond, Virginia Beach, Norfolk, because my parents were covering that area. And Williamsburg was just a field back then.
Right. And so growing up, you had Uncle Ralph that you looked up to, and you got to see what he was developing and thought it was really cool.
Yeah.
What attracted you to the real estate side instead of the financial advisor or something like that? What do you think kind of pulled you towards real estate?
It's funny. So I was obsessed with the stock market. And I think to this day, my dad might admit maybe he's a little upset that I didn't take that path. Mm-hmm. He also might later admit that he's a little jealous that he doesn't have a real estate background.
Right.
And I joke that I have to rebuild a company big enough to bring him on when he's ready to retire. But no, so I remember as a kid, my 12th or 13th birthday, I got a copy of the original Wall Street movie, Gordon Gekko, and a poster. I still have the poster to this day. So no, I was fascinated with the stock market. I formed a little investment club with the neighborhood kids. There was no doubt that was an interest of mine. And I honestly can't say exactly when, but probably going into college, I was very lucky because I knew I wanted to study finance and economics. And I went to James Madison University.
Awesome.
Go Dukes. So I had a plan. I wanted to go do finance and investing. Mm-hmm. But around that time, I think interesting time in our lives. So I graduated high school in 2008. Great financial crisis. Mm-hmm. I think if I had to really, and I've thought about this a lot, why did it change? My dad being in financial services at the time, they had built a pretty large company that had major implications from the fallout of the financial crisis. I think for me, it was kind of I remember there was a day like, watching, someone might laugh about this, but like watching the day where like the Bear Stearns stock price collapsed overnight and kind of seeing that all go down and kind of watching value erode so quickly, I think it scared the crap out of me. I think thinking about how it was so quick to see value wiped away like that, it started to really change my perspective on like, it sounds a lot better to own something real.
Did you talk to Uncle Ralph about his holdings or his investments during that crisis? Like, did you lean on him to see what his experience was as well?
I did, and unfortunately, it was equally a disaster for him at that time. I think the home building crisis was massive, and they were building master plan communities. So, yeah, it was a disaster. And Uncle Ralph was with us. Uncle Ralph passed away about 10 years ago now, so he was able to kind of see that through. And there's some pretty major deals that go back to that era where they were able to restructure with the banks. And ultimately, at the end of the day, like you have a real asset that you're able to work out. And I think for me, that still resonated as like a more attractive path to go down. So I kind of got almost like a disenfranchised with the stock market around that time, which is crazy. I was like 20 years old, right? But I just, that's kind of where it ended up going.
So you go to JMU and you're going for finance or something like that, and then you graduate. What happens when you get out of college?
So while I'm in college, if anybody went to JMU Business School, there's this capstone class called COB 300, which is a semester-long class where you have to pick a project, and you're assigned with a team of 4, and your whole semester is on this project. This is 2011 for me, and I don't know why, but I convinced my 4 teammates that our project was going to be accumulating a portfolio of student housing.
Awesome.
Because at the time, Harrisonburg, Virginia, William and Mary, like these were kind of fragmented markets. I didn't even know what that word meant at the time, but I just felt like I started to kind of get fascinated through my investing lens with REITs. And I think that was around the time you had like you had some big REITs that my dad was sending me stuff on REITs, and I was like, oh my God, student housing REIT. So my capstone project, and I still have like all the materials for it, which is pretty funny, was a student housing REIT.
That's awesome.
At JMU. Now I'm bitter because I remember we got like a B- on the project because we got docked for quote lack of creativity. So I took that up the flagpole and ended up having like the grade adjusted to like a B+ or something crazy. But at the time, that's where I was kind of like, yeah, well, this isn't the sexy. Like people had ideas that made no sense. I was like, well, that's the point. This isn't sexy. It's just makes sense. So it started then. And then even in college, I created my first entity. I forget what it was called. We have a spreadsheet somewhere, but there was a couple auctions that came up for townhomes. And I convinced a couple of my buddies. I was like, let's pool some money and let's try and buy some foreclosed townhomes in Fox Hills.
That's awesome.
And because they were kind of a couple foreclosure auctions coming up. This is 2011, 2012. So the fallout is still kind of working its way out of the great financial crisis. And we were unsuccessful at that. I mean, I had no idea what we were doing, but we made a little LLC. We called it like Madison Partners.
I was going to ask, did it have the words like universal or worldwide in it anywhere?
It had Madison Partners in it. And we didn't like fund the entity, but like I created an LLC to like be ready to try and go to an auction. And I showed up in a couple like the auction steps at the courthouse and just kind of watched. And I was like, this is awesome. Like,
it's a great experience.
And I still joke, if we could have bought a bunch of those townhomes, we probably would have done pretty well with them. But that led directly into, so I got a job at Deloitte. Was my first job out of school in the financial advisory practice. So the financial side, not the accounting side. There was no question that was just like a temporary place for me to go. I'd interned there, had a great time, and it was an Arlington, Virginia-based job. So I was like, all right, we can kind of figure this out. But while I was at Deloitte, we created what became a real thing. I created Valerius Capital Partners, which was some like rabbit hole late night. The Valeria Pubicala was based off like the pseudonyms that the founding fathers used to write the articles of gosh, I'm blanking on this. The letters that Madison wrote that was the precursors to the Constitution. So anyway, I got my like 6 JMU buddy guys together, and this is while we're all working our first jobs, and we raised like $180,000 from my 4 or 5 buddies, and like my one buddy had 2 rich uncles, and they each gave me like 20 grand. Awesome. So through my buddies and their uncles, we raised enough money to buy a 5-unit apartment building in downtown Baltimore, and it was an absolute circus.
That's okay. So you raise money, I assume, from friends and family, pretty much, right? Like any.
My dad tells me I'm out of my mind, gives me nothing.
Right.
He's like, Baltimore, you're
Probably
nuts.
smart.
This is stupid. Go work your job.
Why Baltimore? Just the cheapest.
It's funny. We had two markets where I knew, for whatever reason, I knew I wanted to skip over the single family thing. I was like, no, I want to get something with units. And that's actually when I met, we were looking only at two markets, Richmond
Okay.
and Baltimore. And that's when I met, I could say names, but Tom Rossman.
Awesome.
And he was like the nicest guy to me because I had no business calling around. But Tom Rossman and some members of his team,
awesome.
like would send, like I would reach out to them and like sign the NDA, and I looked at listings, and we actually even bid on a couple smaller little deals here in the Fan.
Yeah.
And ultimately we got it outpriced, and Baltimore on a per door basis was what we could afford. So I think we bought 5 units for $320,000. I think we convinced the bank to give us a loan, and like 3 of my buddies and we all like personally signed for it.
Right.
And yeah, I mean, we could talk about that for a while. There's some pretty funny meetings, but this is all I'm working at Deloitte. My one buddy's working at a bank. You know, we're all kind of working our jobs.
Right.
And 2 of us are roommates here in Arlington, Virginia. So we're like doing this. So like in the middle of the night, we're driving up to Baltimore to like clean out units to get ready for our subcontractor.
Right.
So yeah.
So and Tom is a guest on this podcast. He was I don't know at this point. I forget the numbers, but he was a few episodes ago. So Tom Rossman, awesome guy. How did you even know how to structure that first deal as far as the capital is concerned? If you're borrowing money, you're kind of fresh out of college, haven't done this before. You raise this money, buy this asset in downtown Baltimore. How did you know how to structure like the LP money or what we might consider the GP money or returns and things like that?
It's a great question. So at Deloitte, I was in the financial services valuation practice, and that was a really good foray into, financial modeling, discounted cash flow, all the really technical financial aspects of putting together a deal package. And also, I joke, I learned at Deloitte, I didn't want to work at a company like that, but in terms of the training on like what good looks like, what does a good PowerPoint look like? Oh boy, those people can do some incredible PowerPoints, right? By the time so I started bidding on stuff with Tom and a couple other brokers. By the time we actually were successful in transacting, I'd actually landed a job at American Capital, which was a Bethesda-based real estate. It was a private equity firm with a real estate arm. But literally, I had been adamant about making the jump to like what they call the buy side from Deloitte. And through like a networking event, I got linked up with a JMU alum who was in like the corporate finance team of American Capital's private equity world. And I ended up getting a job in this corporate finance role. And luckily enough, we were on the same floor as the real estate private equity team.
Awesome.
So, and, I found my way into a couple like research projects with them because at the time, American Capital is another story from the time, but American Capital was eventually bought out in a hostile takeover by Elliott Management. And there's a really kind of wild story around American Capital, and I'm very fortunate for where I got to sit. Right place, right time. You couldn't make it up, but I was on the floor where you had the corporate finance team kind of trying to combat a hostile takeover, and I was an analyst/associate who was helping with some of these projects, but also helping like sell teams. Which is more complicated to try and explain, but long story short, it got me sitting next to the real estate team.
Right.
And I remember to your question, I didn't really know what I was doing, and I had this meeting with the bank coming up, and I rolled my chair down the hallway to an awesome guy who's been an incredible friend, investor, and mentor to this day, who's the president of the real estate private equity group. I was like, hey, I'm looking at buying this thing, like what do I do? And he Googled it, and like he saw that I had made a website. He's like, come back in an hour. And so I go back to my desk, and I'll never forget this. I come back down the hallway, and on his big screen, we had made like a website for Valerius Capital to try and like look super legit to the bank.
Right.
And his name's Jim, and I don't think he'd mind. He's got like the whole team. It's like 7 or 8 people. And I don't know all this, and they're all sitting there, and I walk in, and they start slow clapping. I'm like, what is going on?
That's
Jim's
awesome.
got the website on the screen. He's like, Schiavone, what the hell is this? What are you doing? And I was like, Jim, I want to buy apartments. And they loved it. So from that point forward, within like 3 or 4 months, I actually moved permanently into that team.
That's great.
But they, between the associates and the older folks on that team, some of which live here in Richmond and have some cool jobs here, I was able to have a tremendous network of people that helped us buy that first deal.
Man, that's everything. And one, putting yourself in that situation is, I think, the first step that many people don't take. Many people don't take that action to just put themselves in a situation where they can win and be successful. And you weren't worried about doing that. You said, man, I'm going to roll my chair down the hall. I'm going to talk to this guy that you probably may not have any business talking to. And and thankfully, like you kind of learn as you go that it seems like the more successful people actually take more time out of their day when they find someone who's willing to hustle and want to make moves, and they'll spend their time with you. And I think people think the opposite of that. People think, well, this guy's so successful, he'll never want to help me. And I think what I've learned is, like, the more successful people I meet, the more they're willing to spend time with you and meet with you, as long as you're going to hustle and have the right attitude and stuff like that, and try to bring your own value and things like that.
Totally.
So that's pretty cool. You put yourself in that situation. They helped you kind of understand how to structure this first deal.
Yeah.
And then how did that deal result? Like, what kind of experience was that deal?
That deal was a disaster. We owned that deal for about 4 years. We sold it right about a year before COVID. I remember telling everybody, thank God we got out. The short answer to your question is the return. I remember calculating it, and my buddy was sitting next to me. We started laughing. The return was 1.27%. And I was laughing because I was so shocked that we didn't lose people's money.
Right.
Everything that could have gone wrong went wrong. We brought in another friend of a friend whose dad had a contracting company. So we thought, hey, surely we can mitigate the construction risk, because this is a building that needed a pretty like heavy rehab. We put like $100,000 into it, and it was your classic like over budget, over time disaster, right? And so me and my 2 roommates were like bridging money into the deal to just survive, so we didn't like have to foreclose. Later we were able to recoup those funds, and it was part of the 1.27% return. But you think about it from like a structural perspective, we missed a major thing on like a life and safety thing, where we didn't understand that we had to rebuild the staircase off the back of the 3rd floor, which ended up being like a $10,000 hit on an $80,000 budget. That was a disaster.
Right.
So like we're up there in the middle of the night, like trying to like do stuff ourselves. We had a sewer line blow up under the parking lot, and we had to like tear up the asphalt. And we're like, we can't afford a backhoe. So we literally like found a friend whose dad had a construction company. We paid some guy cash on a Saturday to like bring the backhoe and like help us. Like we were there with him, like with the backhoe. I mean, you can't make this stuff up. So we just kind of like, I have 10, 15 stories like that where stuff just kept going wrong.
Right.
And we just tried to figure out like, what's the most cost effective way to survive this problem?
Right.
And that went on for like 4 years, and it was a nightmare. And unfortunately, Baltimore went through, some pretty radical changes as well. And the whole thesis was we were like 2 blocks from Penn Station. So I had been betting on like the Penn Station Amtrak terminal redo, which came like 12 years later. Nice. So we were very early on that. But, I think thinking about the investment life cycle, like the thesis was that we were in the path of development. It was a multi-unit building, so that there was a little bit more margin of error. And ultimately it was all predicated on like workforce housing. At that time, workforce housing, I'm not even sure that workforce housing was necessarily a term, and I have some old like pitch decks that I made that, it was just like that mid-market housing rent, like below luxury, above low income. And for whatever reason, I think maybe just being a renter in a town like Harrisonburg, Virginia, and just being fascinated with apartments, the whole thesis to this day still remains like that. People call it missing middle, people call it naturally occurring affordable housing. We've come up with a lot of words for it now, right? But I think we can all agree, as I'm sure you guys in your business, probably the bulk of your business entirely, is that kind of middle housing segment for the workforce housing renter.
Right. With your 1-point-something% return, do you still work with any of those limited partners today?
Yes.
How did you gain trust with them, especially through that experience, and then convince them to continue to work with you?
So it's a great point. I think the biggest thing is is communication, transparency. And it's such an easy thing to say, but it's such a harder thing to do. And I think, part of that probably goes back to my dad. Part of that goes back to the Deloitte, even the American Capital days. American Capital was a public company. So I had some experience putting together public statements, quarterly reports. I knew what that looked like. And then through my dad, as a financial advisor, and both my parents were just like honest, hardworking people. I was always taught, be upfront about it. So I started doing like a quarterly letter. And, a lot of times that letter was me sharing bad news.
Right.
I think it was pretty rare in the first investment that we had good news to share. Maybe that we sold and I didn't lose your money was like a great letter for me to write. And I still have all of these like saved in a file somewhere. And I think to this day, yes, there are 3 or 4 of those investors who still invest with me today.
That's awesome.
And one of them, fast forward, is my boss from back then, is one of my, who was an investor in that first deal, but I stayed in touch with, and today he's one of my largest investors. So yes.
I think that's excellent advice. I've definitely had a project or two overrun and go beyond its term and things like that. And I would communicate weekly and be like, this is what's happening with your money. This is, what the situation is. This is my next steps. These are action I'm taking. Mm-hmm. If you need me at all, text me, call me, email me. This is where I am. You can find me easily. I'm not running away. I'm not hiding. And I think a lot of people kind of shelter in place when there's an issue. And that's when you need to step up and be a leader and be like, this is exactly what's happening. This is my communication. I understand you might be frustrated with this, but we still need to talk about it. We still need to be sure we're on the same page, we're on the same team, and we understand what's going on. And I think that will allow relationships to go through bad times, good times, et cetera. It's just that communication. Yeah. And it's interesting because you have this really interesting background and experience and knowledge, and you're very intelligent, and your answer is communicate. Right. And most people I think would overthink, okay, well, what's all like the analytics that go into this deal when things are going poorly? And you're like, communicate, just make sure you communicate with your partners. And that simplifies it a bit, but it's still like, I think that's the main vehicle to maintaining trust and making sure that people enjoy working with you and want to continue to work with you.
Yeah. And I think it can go even simpler. Ask for help. I think I was very fortunate that early on, as I was trying to figure out what I was doing, I was able to ask some people for help, and they helped me.
Right.
And if that situation, it's almost like if those first couple attempts to ask for some help had gone poorly, maybe that would have totally changed my trajectory. I think I'm very fortunate that the first few people I asked for help were really supportive. And to this day, I constantly ask myself, and people around me that work with me will hear me say often in meetings, well, who do we know we can call? Who can we ask for help? And some of my investors, I meet with them not just to communicate, but to say, hey, here's what I'm seeing. What do you see? One of my investors is a CFO of a very large real estate company, and I call him like my one-man board of advisors. And I sit with him to share with him, like, these are the things that are going really poorly. What do you think? Like, what should we do about this? And we had an interesting situation with the Ashland property last year where we were considering a refinance. I really was having a hard time with like, what's the right course of action? And there really probably wasn't a right answer. Both outcomes would have probably been okay. And I remember sitting with him a couple times and being like, hey, what do you think about this? Like, let's look. We had lunch at his favorite restaurant, and I brought up my laptop like 3 or 4 times, and we're going through the model together. And he's like, well, And I think to this day, like even we'll probably talk about my hotel project, which has been a total like roller coaster. The first thing I did on that project was I asked people, hey, who do you know who I could speak to that knows about this? And fast forward a year or two, I called one of those people yesterday to ask them for help on something. And they were very quick to give us some suggestions. And I think it's like you said, if you want to build trust, you also have to be vulnerable.
Right.
And I think I think I've always been pretty upfront about, I don't know this. I don't know what I'm doing. I would love some help, some guidance. And I think that's really helped me grow trust with certain people, but also figure out stuff really fast.
Right.
Not get too bogged down in it.
The humility goes a long way. Yeah. And when you work with people that are like, I know everything, It's often that things aren't going to get done, right? But if you have a leader on your team or someone on your team, people on your team that is, it's okay to be humble. It's okay to admit that you don't know something. It's okay to admit that you need help. You can get so much more done because then you're dropping your defenses and you're saying, hey, let's work together. Let's communicate with who we need to communicate. Let's talk to who we need to talk to make sure we can solve this problem, versus the leader saying, I know everything, and then going back in their hole and being like, I have no idea what to do.
Right.
But when you're humble and you can say, hey, look, let's ask for help. And I do that on a daily basis where I'm like, I don't know. Let's call someone. And then you have that network that you can call and rely on. That's pretty awesome. And speaking of, I don't know if we talked early on the hotel stages, but I have a guy that I need to introduce to you after this that has done a handful of hotels and is really solid in that industry. So I'll make sure you have an introduction to him. He might be helpful.
Please. Yeah, I would love that.
We clearly, you've done a lot of deals. You've done a lot of different properties, over thousands of units. We can't discuss every deal, but tell me what the ramp up from there looked like. So you had this kind of like not so great experience, but not terrible. It was tuition. It was time and tuition that got you probably like, okay, maybe you understand the model now, or you kind of understand what direction you need to go, or what you shouldn't do next time. You've had some experience raising money. You've had some experience owning property in Baltimore, no less. How do you decide from here, I guess, that you want to scale a portfolio? What does that look like? What's going through your head at this point?
So through the American Capital days, as that company was being wound down, I was fortunate enough to be in a seat where I was talking to a lot of pretty senior people, and someone pulled me aside literally in an elevator one day, one of the senior executives, and said, hey, a friend of mine is seeding another young guy, to build a real estate company. I think you should meet him. And I was like, oh, okay. So that was, 2017. I was introduced to another, at the time I'm 27, and I think this guy was low 30s, and he had just started a little development company in Washington, D.C. And he was doing ground up, like new construction of co-living stuff. So it was like multifamily, but like rent by the bedroom. And he and a couple partners, he had been seeded by a couple like high net worth guys to do this. But I had a little pitch deck. I still have it somewhere. I was pretty adamant about wanting to build a portfolio of, workforce housing, naturally occurring affordable housing. And it turned out like he and I had a dinner, and they had been talking about doing something like that too. So yeah, we kind of got together. I left American Capital, and we were two guys in a little co-working space in Arlington, Virginia, and we started like looking to try and buy, like I had bought a 5-unit building in Baltimore, and I kind of knew the next progression was, I think we bought a 20 unit and then a 25 unit. So we kind of did that. I mean, we started to build from there, and we accumulated like 26 properties, for a couple thousand units, over the course of 4 or 5 years, kind of leading up until COVID. And we grew from 2 people in a little 10 by 10 co-working space to, I think at our peak, we had 15 or 16 people, So
were you investing still just in Baltimore or in different markets?
No, we were strictly Mid-Atlantic, Baltimore, DC, and Virginia. Okay. That was it. And we had a pretty good mix of, and we had 1 or 2 things in Baltimore, but it was actually Maryland. We had some stuff in Howard County. We did some stuff in Prince George's County. We had a couple littler projects in DC, but really I was always adamant about Hampton Roads.
Got it.
Being from down here in Richmond, I was adamant that it was a great market, given the workforce renter base, the military draw, the industry here, and just my bias being from 757. I still have my 757 phone number today. I just was adamant that, this was a place to be. So we accumulated a pretty good mix. I think it was, 26 properties, I think, across pretty equally like DC, Maryland, and Virginia.
And just to get an idea of the size of the properties, like what was the biggest property that you had by unit count?
Oh, we had a couple in the 150, 200 range.
Okay, cool.
Yeah.
Awesome.
Yeah, I mean, the last thing we did was kind of, again, we got fortunate enough to buy something pretty unique in Virginia Beach that was, so this is probably the coolest deal that we could talk about from that era, where there was a family that had built 2 different communities a mile apart from each other. It was a 62 townhomes and then another 120 garden style. And they were located a mile from each other, different names, kind of different look. They were held and built by the family that developed them since like late 80s.
Awesome. And
for whatever reason, I had this idea that we could buy them and combine them under one banner, save on costs, rebrand it as one asset, like make it all look and feel the same. We bought that project for $21 million. We spent about $2 million renovating like 50 to 60 units and, like a light cosmetic renovation, kitchens, bathrooms. And, at the kind of the peak of the COVID frenzy of multiples and cap rates, I think it was a 4.0 cap rate. We sold that project for $32.5 million. So that ended up, and we had, at that point, we had built ourselves up to, that was my first institutional investor. Awesome. We had a Boston-based private equity firm come in and give us a very large check for that deal, $7 million check to buy that project. So that was our first like institutional investor, and ended up being like a 45% IRR.
It's awesome.
And that was a huge outcome. And again, timing, market conditions, that was kind of the last thing we did. We built our way up to that. And that was the biggest thing that we bought and sold.
That's incredible. That's an awesome way to scale that business. I have a few things that I want to unpack from that era.
And I skipped over a lot too. So we can,
for sure.
We can go through some stuff too if it would be helpful.
When you got started, when you partnered up with these guys that are high net worth, they have capital, or at least access to capital, did you, not specifically a number amount, but did you have capital?
No.
Okay.
No.
That's what I figured the answer would be, right?
No.
Like,
that was a joke. Me and my partner, we didn't have anything.
Right. And so you put in the work, right?
We did.
You put in the work. And I think a lot of people miss that point too, where they're like, well, I don't have any money. And you're like, you can work, right?
Yeah.
And those partnerships are sometimes the most productive partnerships, where the person with money finds the person who can work. The person with money already worked, right? They already put in their time, their effort, whatever. They're in a different stage of life in most cases, where they have family, they want to travel, or they're running a big entity or corporation of some sort. And there's someone that is eager to hustle and has the right drive and the right mindset, and is willing to put in that work to go use their money for good, right? And so those are some of the most productive partnerships. But I encourage those who don't have any money but do have the drive and the mindset and the knowledge and the capability to learn and be humble and understand what you don't know and ask for help, to find these people with money, because they need to put their money to work. They need something to do with that money, and money is everywhere.
That's right.
I saw there was a poll online yesterday, and it was like, if you could have unlimited capital or unlimited deals, what would it be? and a lot of people were unlimited capital, but then I saw some more experienced people chime in. They're like, deals, because the capital follows the deals, right?
I was going to say that. Yeah. And I think I was trying to think about, before we met today, who told me this, but somewhere in my, I think, American Capital days, I had one of my I think I know who it was. He told me, for the right opportunity, there's always money.
Correct.
And I've never forgotten about it. And I live that way to this day. I mean, we might get into some of the things I've done more recently, where I bought something recently that I had no business buying. I had no idea how I was going to raise this much money. And I've never let that go.
Right.
And it's true. I mean, I think for me, there's nothing truer, because I wouldn't be where I am if I didn't truly believe that. And it's almost like, you need the right mix of confidence but humility,
right?
Because at a certain point, if you don't sign the purchase contract and you don't commit and you don't put anything at risk, then you're never going to get anywhere.
Yeah, that's an excellent point.
And I also think, and I don't think I know, because I've been told this over the years, and this is going to sound crazy, and I think people who say this, it's because they have some money, but it's never really been about the money for me. I truly love this. I love it. I love what I do. There's no such thing as Monday. I feel incredibly grateful to have found something that I truly love doing. And for me, my hardest part is kind of blurring the lines between like work and non-work.
Right.
Because for me, it's kind of like my whole ethos, which really like fuels me, and I love it. And as you're going to raise money or trying to build those relationships with people, it's going to be very obvious if you actually care about this.
Right.
And for me, I'm fortunate enough to find something that I care about. So as we're raising money, or I'm having conversations with LPs, new or old, people that know me are like, no, Lyle actually really loves this stuff.
Right.
And I like getting in the weeds.
Right.
And actually, most recently, I've had a couple LPs come to me and tell me they'll give me more money if I'll take myself out of the weeds, which has been an interesting kind of like transition for me. And I had a really close LP tell me that just recently. And, I really kind of like, I'm still figuring out today, like how I'm going to handle that. But it's kind of a funny transition to make. But
are they telling you to build your team and do more deals?
That's right.
Yeah, so they're basically trying to push you to scale a little bit, right?
And and I think you have to really think about balancing your brand and what it is that you do. And I think, as I've reshifted and I think about my investors, I don't have to do anything. I do one or two things a year, and that's great. And I really want to make sure that those things I do are impactful. Before I move on to the next thing. And it's a mentality thing too, right? You feel some sense of responsibility, especially as you know your investors, their families, and now I'm fortunate enough where I have a lot of my capital at risk too, and instead of taking fees over the years, which is, you talked about syndicator, that's kind of not to, but a lot of how I structure my projects today is instead of taking fees, I take it as an additional capital account contribution, which is an awesome tax strategy, but also puts your alignment right next to theirs.
It's the long-term game.
It's a long-term game, and you're incentivized to do it, and it's a great tax strategy, and it allows you to really build a balance sheet. Something that my dad would appreciate if he listens to this is he always told me as a kid, it's not what you make, it's what you keep.
Yeah.
And I have that written on a board somewhere.
That's awesome.
From that, I really endeavored early on to structure a really good like back office team. Like I have a third party bookkeeping team who speaks to my third party CPA, and they're incredible. And they've been with me for, 5 or 6 years now. And without them, without that type of infrastructure, my holding company is just myself. But I have partners on projects and LPs, institutional and non-institutional, and I have a third-party back office team. But without that kind of infrastructure, scaling even to the point that I'm at wouldn't be possible at all.
The last 3 minutes you just talked was gold. It's just there's so many things you're saying where I'm like, oh yes. You have the absolute. I can see why these people want to throw money at you. Like it's just the right mindset to have with how you're building this, your thought process. There's so many things that you're saying about working together as a team, or how you're looking at these deals, or how you're building your company. And so it's just awesome to listen to. So I'll keep moving because I think you still have a lot more nuggets to share, but I could probably sit and unpack that for like the rest of the podcast.
Happy to go wherever you want it to go.
That was great, man. So you're scaling this large portfolio. You obviously, it's well capitalized, like the group you're with is well capitalized, but you still have to raise money, correct? So it's your responsibility to raise money, I would assume, and you probably can use some people in this group's network to do that, but it's likely still your responsibility to put in the effort to hustle to raise this money. What strategies have you learned is best to gain the trust and confidence in LPs and to actually get that check?
Yeah, so it's funny. In that situation, we were building the company. So as we built, we brought on like another partner. We brought on like a fundraising person. My primary responsibility actually adjusted a little bit to like acquisitions, and then, running that side of the company. So you could call me the deal guy, right? But, in those meetings, if you really want to raise money, really the best way to do it is you have to have a deal. It's very hard. And I think a lot of people will say this. It's very, very hard, especially today, to go try and raise money without having a real opportunity. The only real way to have a conversation is to show them a project. And, without that, I think it's really tough. I think what we did is we did a couple things. And again, these are larger conversations, but we actually started a REIT. We did successfully is a loose word. We did start a REIT, and we ended up purchasing 5 assets into that REIT. I think it was, those were kind of our earlier days. So we bought like a 30 unit, a 60 unit, 100. I think the REIT, we ended up raising $5 million for the REIT to accumulate somewhere around $20 million in gross assets in the REIT vehicle. And then we stopped because ultimately it was really, really hard to raise. The thesis was, hey, we can get a bunch of smaller LPs to write $50,000 or $100,000 checks. And literally we joked, we called it the pancake house strategy. We brought in a partner who's a good friend of mine to this day. And he was like, Lyle, we don't do lunches. We don't do dinners. We do breakfast because that's cheap. And I was like, yes. So if I tell you that we probably raised $2 million at, you name the pancake house in Maryland or DC, or the diner, I'm not kidding. I mean, I'm dead serious. We were signing subscription documents in the Pancake House. And, I think that was a big part of it. But we really struggled. I think we had identified a pipeline of assets. But even as we were getting started and we didn't have a track record, to get people to commit to the pool of the REIT was really, really tough.
Right.
And we ended up pivoting away from that. And the bigger deals we did later on, which I mentioned, the $20 million deal where we had an institutional investor. I think, and to this day, this is how I operate. Like you want to get an anchor if you can on something that big, but you're still going to cobble together a couple $1,000,000 from LPs. And, it's been a lot easier to just get LPs involved on a specific deal level basis.
Right.
And anybody who, if you had asked me 5-6 years ago, Lyle, what do you guys want to do? I think I probably, like an idiot, told a few people at like a happy hour, like, we're going to build Blackstone. Like, I want to fund.
Of course.
And that sounds so sexy and so cool. But then when you start to get into the nuts and bolts of like what it costs to administer a structure like that, and that's what ate us alive. I mean, our accounting and legal fees on the REIT ended up kind of collapsing the whole thing. It just wasn't worth it. At $20 million, which we thought was a lot, that was a laughable size to try and justify having a structure like that. And I think a lot of people, unless you really kind of get into the weeds on that, you overestimate, like, while it sounds sexy, it's wildly, like, the red tape and
Right.
the cost of administering it made no sense.
Right.
No sense. And I still feel that way today. I mean, if you're going to go raise a fund, I hope it's $100 million.
Right.
If not, just go do deal by deal.
Right.
And go meet people who like that deal.
Right. I think it's attractive to like use those names and terms and stuff like that. But then when you really understand who's playing in that game successfully, they have hundreds of millions, if not billions of dollars.
Totally.
Right. They're not playing in the smaller millions space.
Totally. And then as you think about, this is a long-winded answer to your original question. As you're going to raise money for a deal, and you might need something, like, for example, if you're going to go buy a deal that needs a loan and it's going to have recourse, like personal liability, you're going to probably need someone to sign that with you. And then it's like, well, how do you get someone to do that? That's a different conversation. It's like, if you think about breaking these two categories out, raising LP money, limited partner money, and $50,000 slugs actually starts to become incredibly easy. What's really hard is getting someone to be like a co-general partner,
Right.
or sign a recourse note. And without that person, there's no deal.
Right.
And doing deal by deal allows you to be flexible on what you might offer someone. And this could look like sharing a part of your profits. This could look like incorporating like a fee for them. It could look like both. And I've done it both ways. And I think, that's kind of how we now structure our deals, is you kind of need to go get your balance sheet part of the equation solved first before you even talk to LPs, because you need to go find that person and say, hey, what do you need? Like, if you're my trusted person and I don't really want to go find a new one,
Right.
what makes sense to you right now? Do you need this? Do you need that? What economics do you want? And if they tell you, hey, I need this % of the profit, and I look at it and say, if I'm gonna have to give up that much, this isn't worth it. I mean, unfortunately, that could be the difference of saying, hey, we're just not gonna do this project right now.
Right.
So that's kind of a long-winded answer to kind of, because there's two sides to that financing, right? And like that, unfortunately, is the harder one, is to get someone who's got a balance sheet and liquidity and is willing to sign that loan with you.
Right. That makes
and
sense.
potentially convince their wife to sign the loan too. I've had that happen.
Right. Right. That's awesome. So you grow this portfolio, getting tons of experience. You're building probably a massive network of people who have, of high net worth individuals and accredited investors and things like that. You get to well over 1,000 units, and then you guys more or less decide to exit. Tell me about that.
Yeah, it's a great segue. A couple things happen. So COVID happens, but before COVID happens, my partner and I looked at each other. We had grown into a larger co-working space, 15 people. And I think we made a mistake that a lot of firms might make, is you get really excited about the acquisition and you focus on the deals and the volume and the fees from doing the acquisition, because that is a big part of the business. And ultimately, if you fail to really build out the asset management side, which is in terms of like execution of the business plan, you're going to have problems. And unfortunately, as you're starting a company and you're like an early stage company, really qualified folks in that arena, asset management, actually were surprised. I remember thinking how expensive they were. I was like, oh my gosh, we kind of started to realize like, hey, we had a young team and we were looking at 300 or 400 deals a year, and we were doing like 6 or 7. You know, our volume was good. And, you know, we were paying analysts and associate level salaries, and we started to kind of look at the business. And, you know, he and I were very fortunate. We like had a coach. Like, I was very lucky. We had like an executive coach. I don't know if you've ever seen Billions.
Yeah.
Oh, you remember Wendy?
Yeah.
I joke, like, I had a Wendy.
Awesome.
And for me, that was incredibly transformative from like a mindset. And I think I went through my most interesting, most painful kind of like mental adjustments, like late 20s, early 30s, as we're going through this, like, how do we grow the business? Where did we go wrong? Because just to be honest about it, we started to realize that our asset base, the fees that we had structured from the recurring asset base, were not enough to sustain the business.
Right.
While we were raising money, one of the mistakes we made, and I've never made that mistake again, was we thought that we had to be really, really fee aggressive in terms of low fees. And where we gave up fees, which was the biggest mistake we made, was we didn't really look at the asset management fee later in life. And on smaller projects that are just as intensive, if you look at taking a fee as a percentage of free cash flow or NOI or gross revenue, you know, we're talking about maybe a $15,000 or $20,000 fee a year from an asset that really still requires, you know, a fraction of full-time resources. So we looked at the asset base, and we were at like 1,500, 2,000 units, but the fee base wasn't enough for us to go hire like a really qualified asset manager for like $150,000. I was like, oh my gosh, that's what, you know, we're going to try and poach someone from a larger shop, because I knew it needed someone that had the training, the experience. You couldn't throw a 22-year-old kid into asset management and expect results. So we were just smart enough to know that was a mistake, but just dumb enough to know that we had a problem. And ultimately, we were trying to solve this problem and figure out how to like either grow our way out of it. And we had convinced one of our high net worth guys to give us like a working capital loan for the business, to give us a lifeline. At this point, I mean, my partner and I, we're like leveraged to our eyeballs. Right. There's no joke about it. Like, you know, in its darkest days, man, like we were wondering like how to pay payroll.
Right.
And that's a really tough thing. And I share that because today that like I haven't really kind of gotten over that. So long story short, COVID hits. And, you know, in our workforce housing portfolio, we start to experience some pretty substantial challenges on the collection side. And I looked at Peter and I was just like, I think we need to sell the business. I really do. I think the only way out is to sell our way out. And luckily for us, we were watching, like, it was weird, right? At that time of the world where multiples were where they were. I thought, I still don't really, I mean, I guess we could probably, that's a whole nother conversation and like why the world reacted that way. But we were able to say, hey, you know what? Like, rather be lucky than smart. The timing of this, like, let's start to divest the portfolio. So we were able to unwind. And so I kind of made a deal with him. I said, hey, and also at the same time, we had started to have some pretty, you know, friendly but serious disagreements about how to grow the business. You know, we had made some hires I didn't think we should have made at prices we shouldn't have made. And ultimately, I was really passionate about the suburban like workforce housing strategy, and he was really passionate about development. And the business had kind of been split over the years. Right. And so, you know, through that, we were kind of like, all right, well, like, you know, you don't even want to go to the suburbs. I will stick around and I'll divest this entire portfolio because it was the right thing to do. You know, I could have left at the time. I had, you know, an offer or two. I wasn't really sure, but I knew I didn't want to go work for someone else. I was like, let me see this through and we'll unwind the business. And I remember we literally sat down and I went to 4 or 5 people. I said, you know, I love you. I'll help you get another job, but in 90 days, you don't work here. Right. We kind of let everybody go. And I kept one person around for as long as I could while I stayed on to sell every asset piece by piece. Yeah. And I spent probably 18, 24 months selling every one of our multifamily properties from DC, Maryland to Virginia. And luckily, we sold them at insane cap rates. Right. And we were able to make a lot of investors a lot of money. We were so leveraged that we didn't really make anything.
Got it.
But it was enough to dig us out of that business and make some pretty solid returns on a lot of the assets.
So your LPs are happy. They're pleased at this point when you exit, but the GP team is out unscathed. But correct. Like it wasn't operationally, it wasn't heading in the right direction. I mean, it sounds like you learned some really valuable lessons in partnerships where you might have had tremendous partners, but the long-term like alignment maybe was growing maybe a different direction or something like that. And then also the operational cost of scale. which is absolutely brutal to learn. And it's like, I still learn that with this company on a much smaller level, almost on I guess, probably a monthly basis, where we want to provide the absolute highest level of quality and communication and responsiveness that we possibly can. But at the same time, we have to be able to stay in business, right? And so we have to have the best people in the best seats with the best technology. But if anything gets too expensive, we got to find creative ways to do that. And so it's a really interesting game trying to scale a business. And that's why I think I see so many small business owners will certainly exit at some point, just because they hit this limit where they're like, I don't want to play this game anymore. Mm-hmm. Like, this isn't the game I thought it was. The game has changed. It's now a different landscape. And this isn't something I want to accomplish after 5 years of just grinding and hustling to build this. I don't want to go through that next phase.
Yeah.
And so you were fortunate in the sense of appreciation and values and things like that around COVID to be able to exit this portfolio. And I think that might be somewhere around the time where we met, where I think when I talked to you, again, you'd briefly stated very humbly that, I had a relatively large portfolio. I exited, and now I'm looking to simplify. I want to rebuild. I want to kind of do this my way, in a sense. You didn't use those exact words, but I want to do this my way, and I want to build something else that I enjoy and that I want to be a part of, and things like that. What did that look like for you at the time? Well, I should say, how long after you exited, were you right into wanting to rebuild on your own, and take all those lessons you learned, or was there some gap where you're like, do I want to get back in real estate?
Right away.
Okay.
Before I left. And I had a very transparent relationship with my former business partner, and I had agreed to stay on, but also I'd already started what became my company today, is Two Rivers Realty Partners, which is really a homage back to where I grew up with Uncle Ralph, Governor's Land at Two Rivers, in Williamsburg. So no, I'd already had a couple things cooking before I even officially separated from the company. So there was no gap whatsoever. In fact, there was overlap. And yeah, to answer your question, he was a really smart guy, really smart, a lot smarter than I was. And I remember we had a couple of really interesting, we loved to whiteboard things, literally, we would sit, and people used to joke, what are they doing in the conference room with the markers again? Mm-hmm. And we had some pretty interesting, I wouldn't say arguments, but we went down the rabbit hole on how do you do this business profitably? And he actually really believed that it was a losing proposition to scale a bit this business the way we had been trying to do it and make it profitable. And I was adamant that there was a way to solve the mousetrap. So I'd spent a lot of time kind of looking at, and honestly, probably it was me being upset, and one of our other partners, I had lunch with him literally 2 months ago, and this is 4 years ago now. Mm-hmm. And he said to me, Lyle, where did we go so wrong? And he's an older guy who had a lot of experience, but not necessarily in the investment management world. He was more on the sales side. And we spent a lot of time talking about this. So to answer your question, I spent hours either in despair as to how did we get here? I left my big private equity job, and instead of taking another big private job, I joined a guy in a co-working space, and I gave 4 years of my life to build this company. And then I had to sit there and sell it all off, mm-hmm. and fire everybody I hired. So I spent a lot of time trying to figure out, where did we go so wrong? And is there a way to do this the right way? And to me, I was adamant that there was. I was adamant that you could smartly scale the infrastructure, do right by the investor asset, and do right by the community. I think what it really comes down to for me is, again, this is one of my other partners who I just had lunch with. He always used to say, Lyle, we can do good and make money. Mm-hmm. And that was the simplest thing you can say. And it sounds silly, but it's true. And I can tell you sitting here today, it's true. And even as you experienced with the property that you guys managed for us in Ashland, we bought the project right. I'm never worried about cash flow there. And I just was talking to to Tucker, and he was like, hey, we have this thing. I was like, fix it. Do it. Absolutely. That, we need to provide an experience for residents. And being in a small company, I don't have any mouths to feed. I'm very hyper focused on where we are day to day. I don't have any major obligations. I have the luxury to be able to make good money, but also reinvest the money. And, I hope I can hold on to that for as long as possible. I mean, I think for me, if you truly care about the experience and the asset, and that's from the resident to the investor, if you have overpaid for something, to me, that's like, wow, you're started on the really wrong foot, because that's going to trickle down to everything else you do. And, this is the argument that my former partner and I used to have. We both agreed that it had to be rooted in buying something right. And I think, as we saw the asset class get really hot, we've seen a lot of people like overpay for assets. And I've kind of watched from the sidelines. And when I see that, I think, dang, what a shame. Because I think that directly translates to like a degradation of the housing stock. Because we can all look around and say, it's a shame that firm paid that much for that big building, because it's probably going to not look so great in a couple years. And we have a lot of examples of that. We've been doing this. I've been looking at apartments in Richmond, Hamlet for 14 years now. You kind of know like what buildings were bought by who and then sold by who and bought by who and what they paid. And you're kind of like, there's a reason that place looks the way it does.
Right.
No one's reinvested the capital because the margins are squeezed thin, and it's a pension fund that's behind them. And I know that nobody's happy there.
Right. Yeah, you can definitely see that. It's interesting. So you went from this really complex model, and you're like, all right, I'm gonna build something on my own and restructure it and keep it simple and focus on the experience. Mm-hmm. Focus on the experience that your team has, and whether that's a management team, your residents, your contracting team, and things like that, you are a big part of that experience, right? Yeah. It's interesting that I think many people will give up when you put so much work and effort into something and realize it's hard to make money. Even though millions and millions of dollars are involved, it's still hard to make money, right? There was, after the first 2 years, I think, of building this company, I'll never forget, I went to a coffee meeting with my business partner at the time, and we were like, what are we doing wrong? What can we not fix? Because we've grown this by hundreds of %. And at the end of every year, we're still break even as a company, right? Like, how do we make money doing this?
Yeah.
And we weren't sure if, like, we knew there's a lot of issues and stigmas with property management companies. And we were like, okay, well, maybe you can't make money by doing a good service, because then you have to overhire and you can't afford that. And that's why several property management companies may have bad reputations, because they need to make money, and so they don't hire enough people to be responsive and communicate well and things like that, and that's the only way they could stay in business. Or do they also have the broker aspect of this firm, which carries the property management aspect financially, and that's how they make money? But we were like, how do we just be a property management company and make money? And things like that. So there was actually a point where we sat down, and he offered to cut me a decent size 6-figure check and say, I'm sorry I got you into this. You can go over to this firm and work with this brokerage. Actually, it was One South Commercial.
Amazing.
He was like, you can go over to this firm, because I developed a good relationship with him. He was like, you can go over there and you'll be excellent at being a commercial real estate broker. And I was like, I went back and thought about it, and I was like, well, this is a check that this guy's going to hand me for no reason, because he's a great partner. But I felt like I was quitting, and I was like, there's a way to do this, and I'm not going to give up. And this is why small businesses don't last a certain amount of time, right? Because it got really hard, and we had to make some decisions and had to get unconventional and stuff. And then I decided, not going to take the check. Let me buy the company, and then I'll be able to make more decisions because it's my money, and I'll be able to think unconventionally and do things because it's my money. And that's what I did. And then it ended up, we figured out how to make money and be profitable and hire people and do all the things at the same time. But you were at a point, kind of a similar point, where you're like, hey, I put in all this work. We haven't made a lot of money on this thing, but I know I can do it, and I know I can figure it out, and I know I can make this successful. And then now you've structured something that is working better for you.
Yeah, that's exactly right. And it was depressing, to spend that kind of time. And I think when we met, I don't know if I knew the extent of that story, but I did know enough to know through the hardships with the other portfolio. I think I'm going to told you this. If we hadn't have met, I'm not sure if I would have bought the Ashland property, because I knew enough at that time. At that time we had sold a couple thousand units. I'd had big property management companies, we'd never worked together before, but I knew that, if you really care about the asset, you're only as good as your team.
Right.
And I think I told one or two of my like anchor investors at the time, if we can't find a good property management fit, I don't know if I'm going to do the project, because I knew it was a smaller deal. It was 32 units. It wasn't a ton of money. I mean, I say that now, unfortunately. I mean, it was a $4.5 million project, right? We bought it for 2.2 and we invested 2. So, but for me, coming from the numbers I was coming from and starting over, I was like, is this how I'm going to start over? And I think that was really important, right? Because it's like, I'm starting over again. I really wanted to make sure that it was a good one to start on. And it had a really unique story too.
Right.
But meeting you guys and saying, hey, you know what, this is a local team. I met you, I met Tucker, and I just got that sense from you guys. I was like, okay, I think we can figure this out. Like,
awesome.
This is a good team. And that was really a big part of it. And I don't just say that to say that, because you and I are talking. I mean, I think two of my investors will probably remember that conversation. And even the guy that I bought the building from, who is my biggest investor today.
Nice.
Which is another cool story. He knows that conversation really well, because who he had managing it, I was like, no, sir.
Right.
Like, I refuse to do this project and pay you this number, and if I can't find someone more capable, professional, to manage the day-to-day, because I'm not going to come be the day-to-day property manager.
Right. Yeah. And it was a relatively good sized lift, because you went in there and just changed everything on that property, and it is gorgeous. It's an awesome property. But I'll tell you, like, our team is certainly not perfect. We'll make our mistakes, but I think what is different about our team is that we genuinely care. Like, we genuinely want our investors to win. Our team is fired up about the things that you're doing. Like, our team knows about the motel you're working on. We have nothing to do with it, but we're talking about it in the office, right? We're reading articles about it and stuff like that. And it's like, we want you to win. We want you to win. And when we have an investor that will trust us and will bring us in on apartment buildings or houses or anything, portfolios that need a heavy lift, and they trust us as their partner, we're going to do everything we can to help that person win. And if we screw up, we'll own it and we'll keep moving. But the idea is, when you have a team that actually cares so much and actually wants that result to be a good one, and it's not just clocking in and clocking out, then the chances are it minimizes the mistakes and it increases that resident experience that you want, to where we're getting good reviews, we're getting good feedback, we're getting it leased up, and we can push the rents a little bit higher. We can take care of the property that you invested millions of dollars into. So this Ashland 32 unit multifamily project was the first leap into this new step for you?
No. This is another crazy thing. I got to think about how we don't go too far down this tangent, but I'd been very active out in Winchester, Virginia. I love that market. We had accumulated 200 something units out there, which, funny enough, made us like the second largest landlord in the market. So I started to get pretty involved in like the local township a little bit. And across the street from us, there was a big like for sale by owner sign on a piece of land. And I had been looking at this thing for years, and I don't know, like, this is another tangent, but I had like really through our portfolio construction, I started to kind of dig deep into like what's performing and what's been. I really became fascinated with townhomes. You can see the leap I'm making here now because of Ashland. I became like really fascinated with townhomes for a couple reasons. On the most raw sense, to this day, interior hallways of old buildings are my kryptonite, because it always used to bother me so much how you just couldn't make them smell good, or you couldn't light them, you couldn't vent them. So there's some things that my investors today know I don't do. I do not do like heavy core buildings, meaning like a lot of interior hallway space. I do not do elevators. And like, those are my two big no-nos. And funny enough, like as I was looking at this piece of land, that's when build to rent started to come about. And again, I share this story because I got really lucky, but like I had no idea what I was doing, but I'd accumulated a little bit of money at this time. And this is right before I kind of left my other company, and I was very transparent, like, hey, I'm going to go do this thing. And he's like, well, we're definitely not doing that. So you could do whatever you want. So I actually put 3 different parcels of land under contract. I convinced these like local landowners to all sign purchase contracts. I tied up 12 acres of land with, I swear, I don't even know if I should say this. I think I tied up 12 acres of land with $60,000.
Nice.
And I had the purchase contracts written as such where the closing was contingent on getting the land rezoned.
Yep.
So through my like Washington DC ground up experience, which I was always just kind of like a secondary play. Like my other partner was, but I was in some cases involved in some of the zoning and like legal challenges. So I knew enough about that and I was interested. So I ended up like going down this like 2-year path of rezoning 12 acres of land in Williamsburg. I mean, Winchester, I'm sorry. And yeah, so I'd already kind of had that cooking, and that was going on before you and I even met about Ashland. So my first jump off was a land entitlement play for 122 build to rent townhomes in Winchester, Virginia. And again, this is another great example. I started dating around, calling LPs, calling family offices, like who likes to do this? This was my most insane thing I ever did, because as we're doing this, I'm spending my own money on like engineering work. I didn't hire an attorney because I knew in Winchester I could represent myself. So I went to the zoning meetings myself. And I ended up finding a local guy whose family is a really prominent investor out of Virginia Beach. And they literally like flew their plane up to Winchester, and I drove them around Winchester, and I convinced them to partner on this deal with me, and they stepped into the project. But that was like my most like interesting and unique like courting of a family office limited partner, which is a different conversation than like raising money at the Pancake House, right? You're talking to a super high net worth family who has their own investment team and they do development, but they ended up being like an incredible partner. And one of the sons is like one of my really good friends and one of my biggest investors today. So even when the company as a family can't invest, he'll invest on the side. And the guys that work for that family office are still like, I call them sometimes like, hey, what are you seeing for construction costs on? And they're awesome. And it's just been a great relationship, because eventually they called me and they said, hey, Lyle, we got an offer we can't refuse to sell it to a home builder. We'd like to make you an offer to take you out. And I was like, sure. You guys are rational guys. Like, sure, put it on paper. And we made a deal, and they bought me out of that project. But I got it approved, and that was another like really unique situation. Because I think one of the other disagreements I had with my former business partner was he always used to get mad at me for trying to do too many things at once. He's like, you can't cover all this ground and be successful. And I argued that there was like two different paths to take, like the geography path or the like asset class. And ultimately, I've started to try and prove out that the geography class, like the track, can be successful, meaning I don't need to be asset class like specific. And I'm not saying I'm doing everything. Like at this point, we've hinted that I have a motel, which is a funny conversation. My bread and butter will always be apartments. Specifically, I love townhome style apartments. Or, if the land makes sense, I think if you're in the right market and you have some unique advantage to understand the market dynamics, whether that's a pricing conversation, it's an approval conversation, I truly believe like for the right opportunity, you can make it work.
Yeah.
And it's, at what cost maybe is a different conversation. Like, was my time that I spent doing the Winchester land deal, was I appropriately compensated for my time? On paper, no. The answer is no. Like if you add up my time, but if you add up like the relationship, the win, the experience, and then the financial piece, yeah, that was wild, and I now know how to take a project through a double rezone with 3 different landowners and 2 different city council processes.
Right.
That's crazy, and that it's hard to put a value on that.
Yeah.
But I do believe that you can do that. And, you see firms, then they scale. You talk about scale. Like you guys have been pretty unique in terms of staying like in your Richmond kind of apparatus. And, you see other firms that are, kind of like of my size that are saying, hey, I'm just going to buy 150 unit workforce deals, but I'm going to travel to a bunch of different markets and we're going to compete on those deals. And I just have no interest in doing that.
Right.
As I joked earlier in the podcast, like I'm a Virginia guy. Right. Like people send me Maryland, people still send me Maryland deals, which I think is funny. I'm like, no, this is the quickest no I'll give you today. Right. The answer is no. I'm not going back to Maryland. I'm not going back to DC. I'm going to just play in markets I'm comfortable in and I understand and I can be present. Right. Right. And if it's something that's like outside my drive track, like someone actually sent me something in Winchester a couple months ago and I knew I was about to buy a project down in Hampton and I knew I was looking at doing some more stuff in Ashland and Williamsburg. And I literally said, it's outside my drive track. Like I'm driving from Arlington to like, if it's outside of my normal travel and it's going to be painful for me to physically get there, that is a bad thing for me.
Right.
It needs to be somewhere that makes sense for me to be present.
Yeah, that makes sense. We've had the opportunity to go to, I think, 26 different states with different clients, and there was no like equity deal involved or anything. It was just like multiple clients that had properties in different states that appreciated what we were doing here, and they're like, come join us and manage these properties in other states. And the ego side of me would be like, cool, we're a national company now.
Yeah.
But the realistic, like, what am I trying to do side was like, no, I like Virginia. Right. And I wouldn't be shocked if like eventually we're in some different markets, and that's something I'm interested in within Virginia. But I have no desire to go to like all these multiple different states and franchise and do all these different things. It's similar to what you said. If I could drive there like a day drive pretty comfortably, like I'm game. Like if we could check up with your team, have a presence, and still have a close-knit team that works well together, like I would be okay with that. But
yeah,
and there's so much business you can do. Like I grew up in Richmond, and so growing up I was like, I need to get out of the city. And so I got out, and I lived in Northern Virginia, I lived in Florida, and I did some things, but I did not realize how much opportunity, and maybe I'm sure there always was, but I didn't realize how much opportunity there was in Virginia and in Richmond to make some money, do business with awesome people, and make an impact. And there's no other place I really would rather do it. I love operating in Virginia. So yeah. I'm kind of similar in that standpoint. So you're doing this new thing. You're seeing some success. You're still learning. You're still making moves and trying new things. Has everything been as easy and as smooth as you thought it would be going off on your own?
Oh, that's such a leading question. No, absolutely not. It's incredibly painful, honestly. It's I think as you think about it, I kind of think it boils back to a little bit in terms of think about like day-to-day satisfaction, right? And like what makes you happy, what do you enjoy? And for me, being what I would call as a sponsor, you get to, and I joke with my wife about this, because adding the motel to the breadth of my day has been maybe more than I had in my bingo card. But even just as a sponsor doing multifamily deals, you're raising money, you're talking to attorneys, you're talking to brokers, you're on site, you're talking to the construction team, you're talking to the property management company. You really get to cover so much ground. And for me, what's always been incredibly fulfilling was having a perspective on the entire battlefield, I guess you could say. I think we talked about battlefield awareness a little bit when one of our earlier calls, appreciating your background. And for me, being able to kind of move the pieces is incredibly exciting, because I feel like we talk about satisfaction and happiness, and some people might describe it as the connection between like what you do and its immediate impact. And when when you guys are engaging with residents and owners, I mean, your chain to impact is pretty short. And for me, at the end of the day, like everything is a lot harder than it took. Like for example, the motel project, I had a pretty good balance sheet. This was last year. I had a pretty good balance sheet. I had 2 or 3 like very high net worth people who I'd convinced to do the project with me. And I thought surely the loan would be a piece of cake. Like I've solved all the big hurdles I know I needed to solve, right? Wrong. I called 34 banks, and I even had a debt broker friend investor helping me. I think the 35th bank is who did the deal. And that almost derailed. We had to extend the closing. And that I had the equity lined up. We had kind of started forming the business plan. Like the last thing I thought that was going to tank the project at the finish line was the lender. And sure enough, I mean, it was when kind of like Silicon Valley Bank, there was like a little like mini regional bank crisis, and it was a disaster. And that was kind of like, oh my gosh, like even though I did learn my lesson on the kind of deal structuring balance sheet side, didn't matter. It didn't matter. And that was like a really good example of like, oh boy.
Was it because it was hospitality and not like a...
Well, I remember I had a banker that my dad was friends with who he calls me, he's like, Schiavone, you're telling me you want to do a construction loan as a first time independent hotelier? Is that what I'm looking at on my desk here? And I was like, yes. He's like, correct. This is the most insane thing I've seen this year. Absolutely not. He's like, And then he kind of gave me the riot act. He's like, you know, in terms of risky asset class and then flag, no flag, first time hotelier. He's like, you have literally checked every one of my alarm bells for my loan committee. He's like, honestly, I might bring this to the committee just to get like a good laugh out of people. And I mean that. You're a smart guy. I wish you the best, but no chance. So, you know, I think I underestimated kind of that. But again, what I was buying the motel and the property for, like, I had the conviction. I knew that the assumptions were the threshold. And even he admitted, he said, Lyle, your model, like, I'm not disagreeing with your projections. Like, you've set he's like, this is one of the most realistic pro formas I've ever seen. Doesn't matter. Mm-hmm. And so we had some conversations around that, but yeah.
Let's jump into the motel. This is a good time to talk about it. So why? What made you, like, because this is a big jump going from what you're used to, now you're into hospitality. What attracted you to it? Maybe it's the Williamsburg, you know, stomping grounds, but what attracted you to this? Walk me through this deal and kind of what this looked like and why you jumped into this.
So it sounds like it's really out there, but when I bring it back to the beginning, I think it actually, for me, was the perfect culmination of everything I had done to date. So it starts with Williamsburg as a market. Obviously, I'm biased. I grew up there, but over the years, I had tried and failed multiple times to get into a multifamily deal in Williamsburg. It's a market that was on paper experiencing some really interesting demographic shifts. Household income, job growth was there. The schools were good. And even kind of like you said about Richmond, the most interesting, obvious thing to me was I was in my 30s. My wife went to William and Mary. And I grew up kind of thinking Williamsburg is a stupid, sleepy town, Williamsburg. But then as I'm traveling across Virginia, Maryland, D.C., and I'm going back to Williamsburg, I'm like, this is pretty cool. Williamsburg's great. And you could start to see that other people were figuring that out. And I think the biggest shift for me was just when I simply realized, like, I would move back to Williamsburg. Like, this is cool.
Right.
But I think that is just a personal anecdote for what had already been happening. People had been, you know, we knew people that had left other major markets and were forming households in Williamsburg. So I was watching Williamsburg very closely. And through my experience in Winchester, I had enough sense to kind of know that I needed to get in tight with the Economic Development Authority. I needed to look at the land use maps. I needed to look at tax zones, enterprise zones. So I did. I started looking at maps of Williamsburg, and sure enough, like 2 or 3 of the parts of town were designated as like opportunity zones or enterprise zones for tax credits. And also I met with the Economic Development Authority and started to understand like what major projects were going on. Sure enough, there's a massive corridor improvement project that goes down that street that involves a new streetscape, a sidewalk, you know, all these things. My alarm bells are going off. I'm like, this is not only in the path. Like, literally, I have a city diagram of an approved infrastructure project that shows me this is in the path. So I go to visit my mom. This is 5 or 6 years ago. This is before I even started Two Rivers. And there's this little for sale by owner sign. My mom works at the senior living facility as a marketing director, and I drive by this motel, and there's a little for sale by owner sign. I go in, and I start talking to the guy who I find out is the owner, and you know, I meet him, and that's it. Like, he gives me his card. I don't really do anything with it, right? And we get through COVID, you fast forward, and as I'm thinking about scaling Two Rivers, at this point I've kind of got Winchester going on. I'm in the approval process. I think we probably had bought Ashland around that time. Mm-hmm. And I'm kind of like, all right, what's my next project? I go and revisit this motel project. And my original thesis was, and I had drawn up some site plans, was to build rental townhomes on it. It was a 5-acre piece of land, a mile from the city, in an opportunity zone. And I actually went to the Economic Development Authority and I filled out a couple pieces of paper, and I got a $100,000 grant to do all of my environmental zoning surveying work.
That's awesome.
I never even wrote a check. So we go down this whole process, and I have a townhome plan. I go meet with like a city council member and the zoning person. And I'm under contract, by the way. Like, this is another one of those wild situations where I had tied up the property for a very small amount of money, and the contract was contingent on approval of at least 38 townhomes. Again, I learned from Winchester, and I wrote the contract as such to give me this like insane, I hope David's not listening. He's the nicest guy. I think, he's my neighbor to this day, and he comes over all the time. I love him. The guy who sold me the motel. But he's like, Lyle, you really got me on this contract. I was like, well, you signed it. Like, we talked about it. I told you you could take it or leave it, but I said I needed time to figure this out, and you agreed to let me have the time. So I tied this thing up for like 2 years to go through this process. Ultimately, the city looked at me and pretty much said, absolutely not. Like, the climate is not right for a rezone here to go multifamily. I kind of stepped out of that meeting and met with the economic development lady, Yuri, who's still there. She's amazing. And I was just like, what can I get for if I do the motel? Like, what does that look like? And she's like, let's talk about it. And sure enough, there was a bucket, an incentive program that was a tax rebate that made keeping it as a hotel was an incentive category. And I was like, all right. So we kind of like endeavored down this path to think like, okay, if I renegotiate the price down to a point where it's so cheap that I would have to really try hard to screw up a motel, what does that look like? And so I thought about it for a few weeks, and I kid you not, I went back to the owner and his two sisters, and I offered them half what our purchase contract was. And I said, hey, because we were kind of like at the end of our diligence period, and it became clear that we were not going to get approval for the multifamily units. So I went back to them. I showed them all the correspondence. I was just like, hey, this isn't going to happen. It's not worth this because I gave you a price that was predicated on, again, from my Winchester. Right. I kind of knew what my per lot needed to be because I had been talking to home builders. So I was just dangerous enough to myself and others. And I just showed them everything. I was like, guys, it's just not worth that. Like, the city's not going to allow it to happen. Here's what I think I can pay for if I keep, and I will keep the hotel. Like, we will rebuild the hotel. And I couldn't believe it. I honestly was hoping they wouldn't sign. I remember when they signed it, I remember thinking to myself, oh crap, I got to do this hotel now. Like, I was so shocked that they took half. So then we kind of negotiated. I was like, I need another year. So then from there, me and my wife, we were big travelers, so we had kind of already started this exercise. Like, what if we do this? We started traveling around the country in motels. Awesome. We wanted to go out to Yellowstone, which was cool. And Middle America is a great place for motor lodges because it was like the American road trip. I remember we went out to Bozeman, and I still have like all our notes. We stayed in like a really cool, like renovated motor lodge. And so again, like, we just started doing a ton of research. I was like, I don't know a darn thing about motels, but I know we like to travel and we stay in like cool boutique stays. And we made a list of 120. It was a list of ideas and also pet peeves. Like, if the bed sucks, we suck. Like, right. And it was a really silly list, and I still have it on my phone. It's like saved in a folder, but we kind of like worked backwards. And then we started to reorganize the list from like, as a user, if we get these areas right, like, I think we can pull this off. And that began like a really intricate process where with more time, you and I could have a 3-hour conversation about anything from shower doors to beds to door hooks to fan blade. I mean, you name the thing. If I tell you I spent like 500 hours on every component of this place, I did.
Right.
But that was fun because it's like you're building something that people are going to experience. And so, but like, again, was that worth my time? A few of my investors will tell you absolutely not. Lyle should have gone and bought 2 more apartments in this time. Right. But here we are.
So how many units is that hotel?
So the motel is 22 rooms.
Okay.
So it's 2 buildings that were built in 1954. And again, culmination of my experience to date from the construction side, we took this thing down to the concrete slab. We rebuilt. So I showed up and I had this vision, like what the motel could be. And it took a while. I was fortunate enough where one of my partners in Ashland was the construction company down in Norfolk. And I convinced the owner of that firm to kind of like entertain me on this vision a little bit. So we mocked up a rendering of it. But we took this thing down to the concrete slab because I had this vision of what it could be. But we had 22 rooms, about 8,000 square feet across 2 buildings. That was built in 1954. And it had not really seen any substantial renovations since like the 70s or 80s. So you've seen the pictures. It's down to people say down to the studs. No, we rebuilt, we reframed the entire place. Yeah, down to the inside out, down to the slab. So,
and it's open for business now.
We're open for business. Yeah, Rochambeau Roadside Inn in Williamsburg, Virginia. It was called the Rochambeau Motel.
Okay.
There's some cool historical significance to like General Rochambeau, and it has a really awesome like big neon sign. And one of my first conversation with the city of Williamsburg with the zoning board was actually to get in writing that I could keep and refresh the sign, because there was a couple of people who actually wanted the sign to come down. And so again, I knew enough to make sure I got some stuff in writing up front on the project to protect us as we worked through it. But to your question earlier about was it hard or easy? I mean, the city gave me a grant. It's a small town. I knew a lot of people, but man, if you knew the intricacies of some of the battles we had with like the inspector's office and the zoning, I was like, the city is I'd really have to call the EDA and be like, you guys are my partner on this.
Right.
Like someone needs to go, like nobody's showing up out here. It was incredibly painful. I mean, it really was. And we were delayed. We were able to be like in budget for the most part, just from some lessons learned. We had a pretty good contingency. I knew enough about what we were doing because we just finished Ashland, where, and which was a really heavy like rebuild of those townhomes. But no, I mean, we were 4 or 5 months delayed on that project, which ultimately ended up costing us the summer season. And it was, I mean, and we're still recovering from it now. We're just now getting busy. But no, I mean, that was another one where you thought you had everybody on your side and everybody still like loves the project, but that didn't matter. I mean, if there's one or two people in the building office who just don't like the project or don't want to show up to work, I mean, there's nothing you can do about it.
Right. It looks like an awesome project, and I know when we go to Williamsburg, I'm definitely gonna stay there and bring my kids and stuff, and I look forward to that, seeing it personally. I've seen the photos and I've seen articles about it. It's pretty awesome. We'll be sure to add the link and notes on it in the show notes for anyone who's interested in checking that out. What is next for Two Rivers?
I think we're in an interesting spot. I'm kind of back to that point where so we just bought a 182 townhome community in Hampton in April, and I had they are an awesome institutional private equity partner in that deal. Rock Creek Property Group out of DC is my private equity partner, and they have a great team, and we're deep into renovations on it's a 70s vintage all townhome deal. So kind of right up my multifamily alley. It's a big property, all townhome style units for the most part. And in like the Buckrow Beach submarket of Hampton. So like a workforce housing asset class. And that was a big transaction. I mean, I think, that's a $30 million transaction. And that's probably the biggest that I really care to go. I think at that scale, to do one or two of those here or there is a really great execution for me. We have good resources. I have the ability to raise that kind of money, which is really awesome. I mean, I'm incredibly grateful. And that's a project that I put under contract, and I needed a lot of money to close. And I will tell you, I had $0 when I signed that contract. And I actually let some of my own money go hard, non-refundable, before I had secured my anchor investor, which, again, one of the dumber, maybe luckier things I've ever done was letting that kind of money go non-refundable without securing an equity partner. But, again, it's a weird mix of confidence and luck.
And you know how to analyze the deal at this point.
That's right.
Like you're confident the money's going to come.
That's right. I knew like the story in the deal was similar to I wasn't the high bidder. Someone had it. It had been an unsuccessful transaction at a higher price. It came back. I'd been hanging around the hoop, which is a theme for me in a lot of stuff, is I hang around the hoop. Like, again, I have the beauty of not needing to do anything. So in terms of, as I think about what's next for me is, I think people really expect me to be involved to a certain extent in the deals that I think even you guys have admitted over the years. Like, I'm pretty involved as an owner in the projects. Even when we're stabilized, I'm pretty involved.
Right.
And I don't ever want to get too far away from that. So I think as I think about kind of growing the company in a more thoughtful way, it probably looks like I have someone who's been working as a third party resource for me as like a construction superintendent. I'm kind of slowly bringing him into the fold as like a development manager, like a mini me to float. Because at this point, he's spent 3 years on construction sites with me. This guy knows when I show up, he literally will be like, you're not going to like this. I'm going to get it fixed. He knows what I'm looking for. And I think, that's a hard thing he has the eye for it too. So I think we probably look like, developing. And I think that's where a huge lesson learned from where I started the past company. We were so focused on volumes and deals and acquisitions. Like, I'm the exact opposite now. I think the next, if there's a hire under the Two Rivers umbrella, it really needs to be focused on like the business plan execution or the management of the asset itself or the management of the project.
Right.
I see, even just kind of being around in our small market, I don't actively look for deals. Like my phone rings and I tell people no all the time, which is a beautiful, really awesome thing. I don't need to go do a bunch of deals, and I don't ever think I'll get back into that level of execution where that's what I'm looking to do. Like I truly believe to do 1 or 2 projects a year. I joked with someone yesterday, I got to go buy 2 more apartment projects to pay for the next hotel project. And I have no interest in doing another hotel project right now. The hotel is awesome, and it has land. I mean, I think I'd love to scale the hotel, kind of like that. So I think, and I'm working on something in Ashland, scale. So I think there's some interesting opportunities where if you have something good and there's an ability to grow that thing, whether that's to build more cabins at the hotel or to buy a neighbor, those are what's most interesting to me, because you think about time on a resource, and it's like if you could add a little bit more scale to an existing thing in your portfolio, and that is going to be a larger value add than taking on a whole new resource to administer that correctly. Like, there's a real opportunity there to do that. And that's what I'm focused on doing, is concentrating in either assets we already have or markets we already have a presence where we have a unique advantage given our presence in that market.
I think you've set yourself up nicely for that in Ashland and with the motel, at least, because those are what I'm most familiar with what you're doing. And there's definitely opportunities right next door on, either project to really capitalize on that. What would you say to anyone who maybe is getting out of college and they want to follow in your footsteps to an extent, they want to do something similar? What is the first move they need to make?
Ooh, I think at the beginning I might have been negative about the Deloitte job, but the truth is you need a little bit of a taste of what all the different pieces look like. And if you want to do kind of like I was saying earlier, the beauty of doing something like I do is you get to really traverse, like the breadth of your day covers a ton of different categories. And just getting your first like real job out of college, whatever it is, you're gonna be able to think about, what can I take from here? And I wish I had appreciated that more in the moment. And I can tell you now, I've already given you examples, like knowing that I don't want to clock in and lag my hours, but knowing what a really good PowerPoint looks like, as silly as that sounds. It's funny, we have a part-time girl that works for us at the hotel, and she sent me something the other day, and I was thinking about my Deloitte days when my first partner there used to beat me up over the quality of my PowerPoints, and I never forgot it. But I got really good at visuals. And at a certain point you can kind of hand that stuff off, but as you're trying to grow, you have to pick up something along the way. And I think the biggest thing, I just was talking to someone the other day, a younger person, kind of JMU student, and a lot of people, you get comfortable, you get complacent. It's scary to move. I took what I could from Deloitte, and I was there for just about 2 years, which wasn't a very long time, but it was enough for me to get a taste. And I knew, I was I need to move on. I need to go accumulate another skill. And that's when I jumped to more of a corporate finance, private equity world. And that I was able to build on that. And I think to think that I could have really done what I did out of school right now, it's not that it's not possible, because I don't want to tell anybody anything's impossible. I would say I don't know if it's prudent. Having a background in whatever your first couple of jobs are and starting to build a network, at least experiencing how a corporation works, big or small, is incredibly valuable. And I definitely took it for granted at the time and I don't think I really appreciated how much it did for me at that point. But I'm very fortunate. I think about it a lot. I'm right where I think I should be to do what I'm going to do next, because of all the things, good or bad, that led me here. I've been lucky enough in the last few years, someone has told me that a few times. In my 20s, I think you kind of think, well, how do I do this faster? How do I start my company? I can't work for this paycheck. And you really get bogged down in that. But really, in the scheme of things, what's a couple years of learning and experience? And you can make the most of it. And you have plenty of time, hopefully, we all do, to figure out how to get to the right point to say, hey, I'm ready to take this jump.
Appreciate the moment that we're in and learn what we can and take what we can from it, and not try to rush and just blow past things, because you don't just blow past to become successful. You have to learn things along the way and develop relationships and things like that.
And you have to do that every day. I mean, I do that now. I just literally My dad gave me this book like 2 or 3 years ago called 10X.
Okay. Yeah.
Dan, I forget the.
Is it?
He's a coach. Dan. His name's Dan something. The book's called 10X.
Yeah.
I didn't read the book. This was 3 years ago. I held on to the book, and for whatever reason, about 4 months ago, I stumbled across the book, and I just read it again. Like I'd skimmed it, and I finished again, and a lot of the book talks about like making the leap to go 10X in terms of growth, whatever situation you're in. And one of the things that it talks about is like the gain mindset versus the gap mindset. Mm-hmm. I'm always sharing this example because, as we talked about earlier, like learning and growing is something you have to really try. And even as you get busier, you like actually have to carve out time to do this. On my calendar right now on Fridays from 9:30 to 10 a.m., I literally have a hold that says gain mindset exercise.
Awesome.
And I've been doing this for a few months now, just to try and sit down and think about like, hey, what did we accomplish this week? And it's an exercise. Like there's a billion tools out there. Like I'm not saying anybody should go read 10X, but over the last few years, I've stumbled. So I have a couple stories like this of other books I've read. And you latch onto a few, like just take one or two things from it and find something that makes sense for you to practice. Because like you just talked about living in the moment, my wife will admit this, like I'm terrible at that. Like by no means am I good at that. I have to think about that a lot.
Right.
And I have to practice it a lot.
Right.
And I do that every day. And this is just an example of kind of, if you could start figuring out what type of things you need to do at that age that resonate with you, it's going to change over time. And I'm at that place now where I have to really try and appreciate that and try and take stock. Because like, you always think about, I wish I was further along. I wish I had built no, like you have to really think about, like we've talked about some really cool deals today and stuff that I haven't really thought about in a while. So I thank you for that. And, when I think about it, I'm kind of like, wow, that was really kind of crazy, wasn't it? And you just don't appreciate it.
The strangest thing is like, there's some saying, I'm going to butcher it, but it's basically like, if you 10 years ago would dream of being where you are right now.
For sure.
But where we are right now, we're like, come on, man, I need to do this deal or this other, or now I need to scale to this level or something. It's just, and so it's good to just kind of like hang out and realize like, man, you've done pretty well. Like you've done pretty well. How can people get in touch with you or learn more about the motel or what?
LinkedIn's great. Lyle Schiavone, LinkedIn. It's at Two Rivers Realty Partners. Should be pretty easy to find me. You can message me there. You can shoot me an email. You can put a link to my email address.
Okay.
And then the motel is stayrochambeau.com.
Okay.
And it's the Rochambeau Roadside Inn. If you Google it, Rochambeau Roadside Inn, you'll get it. And if you're on Instagram, you'll see some pretty funny stuff. The Instagram is Stay Rochambeau. And it's just me and my sister that do the content. So you'll see some funny like selfies of me like explaining the hardships of getting the ice machine to work.
Awesome.
Things like that. That was my fun way of documenting it. It's kind of like if you've seen Schitt's Creek. I live Schitt's Creek.
I wanted to reference that like 4 times so far this podcast.
There's anybody who's close to motel, we send around like a Schitt's Creek meme a couple times a week, me and my sister.
Right.
I probably already got one while we're sitting here.
Yeah.
And I'm in Williamsburg a good bit. So we live in Arlington, but I spend a good time in Richmond, and then I'm down. I stay at the motel a couple nights a week.
Awesome.
As my home base. My parents are down there, so I travel between these areas, and love to catch up with people and get out there. I hate my desk days, so just get me on the road.
Awesome. Any final thoughts?
This was great. I've never done a podcast, so thank you for inviting me. This was really, really enjoyable, and I think it's great what you guys are doing, and I really appreciate you guys as partners. I'm excited to grow with you guys. I love Richmond. I'm trying to get my wife to move here, so maybe she'll hear this.
Nice.
Maybe down the road, but no, just really excited, and I hope that if anybody wants to reach out, or if I can be helpful to anybody, please don't hesitate. I literally was just talking to somebody yesterday at the College of Business at JMU, saying, hey, connect me with there's got to be a kid that's looking to do something in real estate. Connect me, because I wish that I had a better understanding of the different routes you could go back then. So please, I love to, if I can be helpful, if I can be a resource, if I can connect anybody, it's one of my favorite things to do. So
that's awesome to have someone like you with your knowledge and your experience be willing to share that information and to try to help someone else is incredible. And I would tell you, I would never know that this is your first podcast, because just how you communicate and articulate your thoughts, and kind of you are someone who probably needs to speak more in front of people and share what you've done. It's pretty incredible, and I think you have a ton of value to add. I appreciate what you're doing for the communities that you're investing in. Your projects are awesome. It's really cool to see what you're doing. And I think the trajectory, the mission that you have to kind of expand on those projects will do a lot of good for those communities as well and make an impact. So thank you very much for what you're doing. And thank you for coming on the podcast. I really appreciate having you on as a guest.
Thank you, Stephen. Pleasure to be here.